Hey everyone, welcome back to Corporate Dakota, the place where we uncover the shady dealings and hidden fortunes within corporate filings. And in this report, we have some interesting sales figures and a surprising shift in how the company is spending its money. Today, we are diving into Axil Brands Incorporated's latest quarterly report for the period ending the T. Hi. 30th of November 2025, for a company that sells things like hearing protection and hair care products, you might expect the numbers to be pretty straightforward, but sometimes the simplest filings can hide the most interesting stories. So let's get straight to it. First things first, if you love breaking down these dense corporate documents into plain English stories, make sure you are subscribed as we do this every week, and if you want to connect with fellow investors and dive deeper into these topics, join our Discord community, linked in the description below. This filing is essentially a quarterly checkup on Axil Brands Incorporated reporting their financial health and operational activities. It gives us a snapshot of how they are doing right now and what they expect for the near future. Looking at the balance sheet, the company's assets are growing significantly. Cash is up to nearly $5 million from just over $4.7 million last period accounts. Receivable also jumped a lot, indicating they are selling more on credit inventory too. Has more than doubled from about $2.5 million to over $4.7 million. This suggests they are stocking up for future sales, maybe anticipating a big holiday season or a new product launch. This is a good sign of growth, but it also means they have more money tied up in products that aren't sold yet. On the flip side, liabilities are also increasing. Accounts payable has more than doubled from about $866,000 to $1.8 million. This means they owe more money to their suppliers. This isn't necessarily bad, as it often goes hand in hand with increased sales and inventory, but it is something to keep an eye on. Now let's look at how Axil Brands is performing income-wise. For the first 6 months of 2025, sales are up to almost $15 million from about $13.5 million in the same period. Last year, this is a solid 10.4% increase. Great news for the company. However, the cost of what they sell also went up significantly from $3.9 million to nearly $4.8 million. This means their cost of goods sold as a percentage of sales has increased. This is cutting into their profits. That profit margin is shrinking a bit, meaning for every dollar they sell, they are keeping less of it, which could be due to rising material costs, or maybe they are selling more lower margin product. And this directly impacts their gross profit, which for the 6-month period is up slightly, but as a percentage of sales, it has decreased from 71.1% to 67.8%. This is a key indicator that their pricing or their costs are not perfectly aligned with their sales growth. They are selling more but making a little less profit on each sale. The good news is operating expenses have actually gone down. This is a really interesting shift. The total operating expenses for the 6-month period dropped from over $9.1 million to about $8.8 million. This is a 2.9% decrease. Digging deeper into operating expenses, marketing and selling costs are down considerably. This makes sense because the company mentions they are shifting from direct to consumer sales to expanding their retail distribution channels. This means they might be spending less on individual online ads and more on getting their products onto store shelves. A big contributor to this decrease has been stock. Base compensation expense, which dropped significantly from over $600,000 to around $380,000. This can happen for a lot of reasons, like stock options not being exercised or granted as much. This is a non-cash expense, so it affects profitability but not cash on hand directly. And while it lowered expenses, it also means less emphasis on that particular compensation model. As a result of these factors, income from operations has seen a huge jump. It went from just over $532,000 to over $1.3 million, a massive one. 47% increase. This shows that even with tighter gross margins, the company is becoming much more efficient at managing its overall costs, leading to much higher operating income. And finally, net income for the 6-month period has more than doubled from around $523,000 last year to over $1 million this year. This is a fantastic performance, showing the company is not only growing its sales, but also becoming more profitable and efficient. Interestingly, their adjusted EBITDA as a percentage of sales has also improved from 8.7% to 12.2%. This non-GAAP measure helps show the underlying performance of the business, excluding certain expenses like stock-based compensation and taxes. So even though their gross profit margin is shrinking, their overall business efficiency and profitability is actually improving. Looking at the most recent quarter, the 3 months ending the 30th of November, 2025 sales are up about 5.2%. This growth is attributed to a large order from a major retail chain, which is great for volume. But as we saw earlier, that order came with tighter profit margins. Gross profit for this quarter stayed relatively flat at around $5.5 million, but its percentage of sales dropped from 71.1% to 68.1%. Again, this points to that lower margin big order impacting profitability per sale. However, operating expenses for the quarter actually decreased by about 4%. This is driven by lower marketing costs, which is likely a sign of that shift to retail channels and lower stock-based compensation too. This efficiency gain has led to a healthy 34.2% increase in income from operations for the quarter, jumping from about $672,000 to over $903,000. And net income for the quarter saw a decent rise from $633,000 to $704,000. This quarter shows a slight slowdown in net income growth compared to the 6-month trend, but overall positive momentum. Now about liquidity and capital resources, Axil Brands states they have enough cash to operate for at least a year. They are confident about their future revenue. And cash flow, they also mention they might seek additional capital if needed, but they are not currently planning to do so. They believe their current cash and operational cash flow are enough. Right now, this is a crucial point for investors as it signals they might not need to dilute existing shareholders by issuing more stock anytime soon. The company does depend quite a bit on a few customers and suppliers for the 6 months ending November 2025. One customer accounted for 23% of their sales, and one supplier accounted for a whopping 81% of their purchases. This means a lot of their business hinges on just a few relationships. If one of these key partners has issues, it could significantly impact Axil brand. So this is a considerable risk factor. Axil operates in two main areas: hearing enhancement and protection, and hair and skincare. They are seeing strong performance in the hearing segment, which is driving their overall sales growth. The hair and skincare segment is smaller, but also growing. They recently incorporated a new subsidiary to offer marketing services, which could be a future revenue stream. Overall, Axil Brands Incorporated seems to be navigating a period of growth and efficiency improvements. They are selling more and managing their expenses better, leading to higher profits. However, the shrinking gross profit margins due to larger but lower margin sales and the heavy reliance on a few key customers and suppliers are significant risks to watch the company's strategy to expand into national retail channels is a smart move to increase brand visibility and reach a wider audience, but it will be critical to manage those margins carefully moving forward. So while the numbers are looking up, there are definitely areas that require close attention. What do you think of Axil Brands' performance in this filing? Are they on the right track, or are those supplier and customer concentrations a ticking time bomb? Let me know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate filings. Thanks for watching, and see you next time.